Hi guys, and welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Welcome back. It's been a while, and I know I haven't been in the lab lately, but I've been on the run, and you've seen a lot of those videos while I'm on the go, and just giving you some insight. But right now, we're going to break down the balance sheet for GameStop. What I see, what we call the T12, the trailing 12, and that is what it is. It's like a fiscal run. Okay, so the fiscal year from today versus last year, and how profitable has GameStop been in the last 12 months. Now, this is how the S&P 500 evaluates companies. They look at the T12 to see if you are actually profitable. And if you are, then you're eligible. There's a big difference. You have to have market cap, prerequisite, and I get all that, and we'll get there eventually. But when people find out just how profitable GameStop really is, well, that's when the masses come back to it. I know the movie's coming out. I know that we're going to keep looking at earnings and look at how positive they're going to be. There's going to be a lot of positive sentiment on this stock and on this company, and there should. There should be because it's undervalued. But let's go ahead and dive into it because I want to show you what we were going over before. This is GameStop currently trading at $18.45 right now. I know the market's closed tomorrow, so I'm going to enjoy my day tomorrow as well. But I want to look at this net income sheet here. Now, when you guys look at the net income, there is 1, 2, 3, and 4. Those are the 4 quarters that exist right now. This 5th quarter, and I'll show it to you here, does not exist because it's off the books. And that 5th quarter was $157 million loss. What we're taking off of GameStop's books right now, oh, excuse my phone. Goodness gracious, guys. No edits, no cuts. I'm living life in front of you. Let me lower that down. I get messages all day. That'd be going off all day. Okay, so let's look at this. So GameStop right now is sitting at 108, 94, and 50 loss, but a positive of 48. So that's a net of around 2 million over here loss, plus these other numbers here, about 110 and 94. So you're looking at around $204 million loss over the trailing 12. But the best part about this is we get to scratch the 100 million off the books right here. This number is going to be gone completely starting Wednesday, I apologize. So that number will be gone and we'll get a new number. So instead of being down $210 million off the trailing 12, it's going to be 110 million. And why does that matter? Like, what's the big deal? Well, I'll tell you why. Because this is still quarter 2. And in quarter 3, GameStop has around $20 million coming their way. And that's because they're settling out the European deals where they sold off land and assets. So that means you're going to have $20 million off of this negative total of the 94.7 that they were the previous year. We know that they shortened their footprint, so SG&A should be coming down. If you look at the SG&A before is around 390, I'm going to anticipate below 350 again. And the reason being, they closed down 36 Ireland stores. They're better operators right now. And I think that we have annualized on the inflationary numbers, okay, and supply chain issues, all of that above. So you can tell because we don't have this negative 157 anymore. The 108's coming off. So I look for a negative, Wall Street said negative $48 million, and that's beating projections. That's like hitting it out the park. I have them, on par with that. Even at the worst, Wall Street has them at 60, and that's pretty damn good considering SG&A of 390, I apologize. And if you go the previous year in the same quarter, you were looking at around 378, 421, but 378 tells you something. It means that, remember when I tell you they have those hidden figures, like they're actually paying out that immutable X, commitment. If you guys don't know about that deal, go watch the other videos, please. But what I'm telling you, this is a hot number, the 390 SG&A that was heavy, and that's why they're heavy here at the 107 loss. I think that you're going to be able to take off $40 million off of that, so that's going to put you in the 60, negative $60 million range. But remember this, they only have about $40 million spread out over the next 3 quarters to pay off that immutable X commitment. Once that's done, by next year, you're at 0 on that. That means we don't have to pay the additional $15-ish million per quarter. That's huge for GameStop. If you're telling me GameStop can net $40 million plus the $20 million in Europe with all the assets they're sold off, become better operators, you're looking at around a $60 million turn and burn. Just dead, nuts to nuts. Now, if they got better, it's going to go up, obviously. And or if there's games out there that are being released and you have a really good run, which we know we have had because of Zelda and the numerous other titles that have been released. But when you look at GameStop's net income, just know it's going to be negative 94. It's flat here, so we're down $100 million. Whatever we come in right now is going to get added on to this $100 million. So let's just say it's 50 million, like they said. We're going to be down around $140 million, ballparking the number. Now take away the 20 million. Okay, I'm going to help you out with the math. 20 million from Europe. Boom, we're down at 120. Now take away the 40 million that we have committed to IMX that will be paid off completely. You get it? We're below 80 million, $70 million for the whole year. With this economy, with this macro trend, we're here and we're down $70 million a year on the trailing 12. How much profit can we squeeze out of this rock? I think we're really close. $70 million is so close on a business that's doing 5.8, 5.9 sales, $1 billion worth of sales. So this is how I explain to you trailing 12 is coming. I'm going to explain to you GameStop's coming, and it's going to be amazing. Okay, I'm going to be here for it. I'm looking at it just like you are, but this negative 50 million won't even exist next year. I'm telling you, it'll be flat. So that new trailing 12 by March of 2024 is going to be a hell of a number to look at. And all you need is $1. All you need is $1 of profit on the trailing 12, and you're eligible for that S&P 500 because the market cap will get you there. And we already know all the other prerequisites we hit. So get the market cap up, which, just so that we're clear, the S&P 500 market cap requirement used to be 14.8 billion, 14.3 billion. It's now down to 11 billion. That means we have to have a stock, a share at $38 a share. Let me tell you where they don't want us to get. The entry year high is $34.99. You don't think they want us above that? There's a reason why we stop at 35. Don't worry, I'll keep buying it, but you keep holding it down. T12, it's coming, guys. Get ready. GameStop, can't stop, won't stop. GameStop, T minus 72 hours. I'm ready. It's actually 4 plus that, so 76 hours. I'm ready for it. Let's get it. Peace.